Today Television. I'm Sakshi Batra, and this is the festive season special that we have brought as a series for all of you in the run-up to Diwali. And on this special, we are going to be welcoming a top market guru. We have Mr. Gautam Shah, founder of Goldilocks Premium Research, joining in to share with you what to expect in the markets in the run-up to Diwali and beyond from here as well. Warm welcome to you. Good morning. Season's greetings for the festive season as well, Gautam. Always a pleasure to hold you with us in conversations, trying to understand insights and what's going to work well for investors going forward from here. The markets specifically have been actually lackluster in the run-up to Diwali from last Diwali. From the time that we spoke, in fact, in last Diwali, I was just going through our previous interview when you had mentioned that there could be a time that 26,800 could come in on the Nifty. Thereafter, we've had earlier conversations in this year as well, and you did look at the uncertain environment that the markets were facing, from tariffs to other geopolitical tensions, and you said that a reasonable expectation would be 25,500 by the end of the year on the Nifty as well. I want to understand from here, what is your current thought on the Nifty as well? Any suggestions that you would have after this range-bound, lackluster, volatile trade has panned out all this year so far?
Good morning. Season's greetings to you and to all your viewers as well. Yes, I think a lot of market participants have complained that the Nifty hasn't done as well in the last 1 year. Yeah. As we speak today, there is zero return on the Nifty. But I think this has really become a very stock-specific and a theme-specific market. And even in this period, I think there are some very large winners. I mean, if I have to give you one name in the large cap, look at what Bajaj Finance has done versus, for example, an Asian Paints. So I think if you were in the right pocket, if you were in the right basket, money was to be made, in this last 1 year. I think what has happened in this period is basically markets digesting all the negative news flow that it has got. From FI selling to the economy downtake, to tariffs, to geopolitics. We've actually had a lot of issues, in this last 1 year. And honestly, if at the start of the year, if somebody told you that, these are the things that we are going to deal with, where do you think the markets are going to be? Somebody would have just said 15%, 20% lower. So given that, given the context of the issues that we were dealing with, I don't think it's a bad outcome of the market staying sideways. So I think the 1 year of hard work is, in a sense, completed. I think most of the negatives are priced in, and now the market could be preparing for a breakout. So I think this Diwali to next Diwali could be a lot more special than the last 1 year. I think I'm very clear about that, and I see that on the screen. Globally, we are in a bull market. If you look at US, Europe, Asia, they're all doing well. And I think India will eventually have to participate. So I do believe that we will break out about 25,500 sometime in the near term. And once that breakout happens, we should be ready for lifetime highs of 26,200. But my longer term target for the Nifty, which is 28,400, remains intact. So having said that, this is not a market about index and the top 100. Focus on mid caps, focus on small caps, focus on the right themes. And I think next 1 year should be sorted.
Next 1 year should be sorted. Any expectations on the kind of returns that we can have, or should we have again modest sort of expectations in the run up to the next year as well? Or do you think a lot of covering up will happen of this year too?
See, the government and the RBI have done a lot. In the budget, you had the income tax reduction, then you had the big GST news flow. The RBI governor has done everything possible to please markets. So honestly, from the government and RBI side, a lot has been done. Now it has to show up on the economy. I think that's eventually, what everyone is looking at. So I think the next couple of quarters will be important. And if the earnings in the next couple of quarters do see an uptake, then we will have to believe that India deserves the valuations and we will go back to the outperforming ways. But having said that, we are still one of the more expensive markets in the world. Let's not forget that. I would say on the index, expect a modest expectations of about 10 to 12%. But in stocks, I think you can easily expect 20 to 25%.
Okay, fantastic. So we will actually come to the kind of stocks that you should be really watching out for in case you want to create that alpha, but still hope for a 10 to 12% upside on the index level as well. Let's actually come back to the current stage and where we are at as well. At this point in time, there's a lot of FOMO in the market because what has happened is that the other asset classes, specifically precious metals, gold and silver, they have widely outperformed equities and they have surprised year on year year for the fourth consecutive year, Diwali to Diwali returns. If we look at what has happened on gold, it's severely outperformed the Nifty as well. So it's not just this year because of geopolitical tensions, economic uncertainty, tariff policies, you name it, dollar weakness, Federal Reserve rate cuts, all of these factors, and the central banks buying, that has also been a major factor. Despite that, even in the last few years, we have seen that trend continue for gold vis-a-vis the equity and the outperformance that gold has displayed. That has led to a lot of FOMO among investors, because at every stage we thought it's too much and it's already rallied too high. 50% of a move on gold for this year so far. What's your sense? How have you read through this? Were you able to catch most part of this magic on gold and silver?
Well, Sakshi, anybody associated with Goldilocks Global Research would not have that FOMO, because I think every single interview of mine in the last 1 year, I made the point that gold and silver is going to outperform equity benchmark returns worldwide. I think that's been my stand in every possible interaction and every possible report and at events globally as well in the last 1 year. So honestly, as a technician, I'm not surprised. And the beauty is, since I look at the price action, not once in the last 1 year, there was an indication that there is a problem or it is stopping out. So I think we've actually played out the entire gold and silver rally, but these are levels where we are recommending profit booking. So last Diwali, we said that gold and silver will do very well next year. This Diwali, we are saying that these are time to take profits. I know a lot of people are parking capital now at these levels.
Yeah.
I don't think it's right. So around $4,000 on gold, around $50 on silver is where I recommend profit booking. I'm not saying that the rally is coming to an end on an overall basis, but it will need some multi-month consolidation before it does well again. I think there is a case of equities, Indian equities possibly making a comeback. So if you're booking profits in gold and silver, go back to equities. I think there are lovely opportunities.
Okay, so book your profits in gold and silver, put your money in equities. It is now the time that equities will come back into flavor. And that's the clear stance that's coming in. Coming to equities, any key themes that this in the run up to Diwali that you are really bullish on? I remember last time around when we spoke, you were talking about metals. You had been talking about cautiousness on the auto space. You had been talking about the IT space. Banks you were largely positive on, especially the NBFCs. You started by talking about Bajaj Finance. So give us a sense, overall sense of how are you looking at certain themes now?
Yeah, I think it's good to see a lot of underperformers make a comeback. I mean, the way the auto sector has come back, I think is quite commendable. People alluded to what happened on the GST front, which is logical, but coming back itself is a very positive sign. Bank Nifty at 56,000, I think, is a very positive sign. Despite all the stress that we've gone through, this index is just a few percentage points away from lifetime highs. But I think the two key themes, which I think between this Diwali and next Diwali are likely to outperform. One is our old favorite metals. And I think the price action has been super solid in the last 1.5 months. Valuations are comfortable. It is under-owned. And given all that's happening in the world, I think it's advantage metals. And it's a global commodities rally, honestly. So I think metals for me is going to be the one big winner between this Diwali and next Diwali. And that will followed by PSU banks. I think PSU banks are setting up for something really special over the next 1 year. At least that's what the charts are indicating. Valuations are comfortable, nothing to do with foreign policy in some sense. So I think PSU banks, led by the top names, I think could be big winners over the next 12 months.
Okay, got that. So I hope all the winners have been noted down there. Let me also ask you on the wide underperformance of some sectors like IT, for instance, thus far. How are you looking at that? We are kickstarting the earnings season again. Of course, this large part of underperformance has been led by uncertainty in the global policies, especially in the US, with the raising of H-1B visa fee hike. Before that, of course, the client spending has been constrained because of economic uncertainty and decisions getting delayed too. What is your sense on IT? Do you see some kind of bottom formation?
Well, I think there are just too many headwinds, and I don't see the IT sector bottom out anytime soon. It might stay in a range, but it's unlikely to move up big. There are a few points here. Number one, I think with all that's happening with foreign policy, with the Trump policies, I think that's something which is clearly impacting the IT sector. Secondly, FI selling continues, and if FIs have to sell, then it's some of the top stocks, and therefore IT stocks are right up there. Thirdly, I think the disruption that's happening in the world because of AI, I think there is still this debate whether it's going to help Indian IT or impact Indian IT. I would want to believe that it would impact Indian IT a lot more. And valuations are very high. I would rather buy a 9 PE bank than a 30 PE IT stock. I mean, just a commonsensical argument here. So given all of that, while there could be some near-term upside, I think IT, pharma, FMCG should be avoided. I don't think these three sectors are going to make a comeback in the near term. If things change over a period of time, we will come to it. But right now, there are no triggers.
Some of the last 1 month, 1.5 month favorites have been the consumption-oriented sectors because of the GST rationalization. I wanted to understand from you, is all the good news already priced in, or is there going to be much more upside there? You did say FMCG should be avoided. How about maybe consumer durables or some of the other retail-specific stocks, quick commerce focused stocks that are also being seen as beneficiaries of this festive demand?
Well, I think it's too early to say that the positivity has been priced in because, the consumer is buying as we speak and the market is also trying to discount as we speak. So I think it's too early to say that the positives are in the price, and therefore this quarter earnings I think is going to be very critical. But I'm very clear that with more money in the hands of consumer, I think the economy can only do well from here. I mean, based on a very common sense argument, and therefore I'm looking at very specific spaces. I mean, auto I still like. I think auto is a sector that can easily deliver a 12 to 15% up move from here. Quick commerce we like, but the valuations are not justified at current levels. I'm not a big fan of quick commerce anymore. But I think the other space that we really like is travel, tourism, and hotels. I think that's a mega theme for me. Hotel stocks on an overall basis, if you compare to global peers, are nowhere in terms of valuations. And I think some of the top hotel stocks and travel stocks could be big winners and a big beneficiary of the GST outcome. So that's one space where I think investors should definitely look at.
Okay, on the GST rationalization, it's the hotel space that seems positive at this point. Also wanted to understand, of course, we'll come to specific kind of stocks that we should be invested in, but one more factor that has been a big missing factor in this market that's also led to probably subdued performance on the equities is the missing of the FII money as well. Record outflow, $18 billion, upwards of 1.5 lakh crore rupees odd. How are you looking at this? We have also widely underperformed the globe. You were talking about the global outperformance that's coming in, but India has largely underperformed as well. In dollar terms, we have underperformed MSCI, All World Index by 37 points. What's next, and how should one be really looking at a global factor on that matter?
Well, I think a lot of market participants have been hoping and praying that FIs come back and support this market. Don't have that expectations because it's highly unlikely that they're going to make a comeback anytime soon. The reason is very clear. The moves are far cleaner with a lot less volatility and much better valuations in markets around US, Europe, and even in Asia. You compare China and Hong Kong with India's valuations, a lot of the top stocks, and I think the writing is on the wall that the valuations are a lot more comfortable. So I don't think the Indian market next phase of the rally is going to be led by FIs. It will still be led by domestic money, which continues to be super solid. So I really don't have too much expectations of FIs making a comeback because I see very strong trends globally continuing over the next 3 to 6 months or even 12 months. And in that kind of an environment, it's our own money, the 30,000 crores that's coming into the system every month. As the market momentum picks up and as we start moving above 25,500, I'm sure there's going to be another big wave on the way up. So I remain optimistic, but optimistic based on domestic money and not FI money.
Okay, got that. Now coming to the key, kind of stocks that we should be really looking at. You've marked out a few sectors that you believe are going to be the ones that may outperform. I know that you do not talk specific stocks here, but could you, help us understand large caps vis-a-vis mid caps in all of these sectors that you're betting big on, and how to select certain stocks there?
See, one key point is whatever FI selling that's happening is happening in the top 100. That's the reason, the Nifty and the large indices have not been able to do anything special in the last 1 year. And I think this is going to continue. I don't think this is an environment where we can start talking about 30,000 Nifty and 50,000 Nifty just because these are festive times. I don't think that's the right approach to markets. But I do believe that one needs to be very rational with the views. And given the FI selling and given the global environment that we are living in, top 100 should basically be avoided, but the mid-cap, small-cap side of things continue to be quite positive.
Okay, fair point. Help me also understand when it comes to selecting certain stocks, what are the parameters that you usually look at and that you advise your clients to look at as well when you choose the stocks, especially in this very given uncertain environment where it's not just about the company's own fundamentals, when it's not just about your own balance sheets as well, but a lot to do with what's happening on the external environment as well. So how do you go and pick out that stock that will be able to probably beat the external environment and continue to stay on track?
See, I think firstly, as a chartist, as a technician, what I look at is relative strength. So if I were to divide one stock by the Nifty, for example, Bajaj Finance divided by the Nifty, and if that ratio chart is headed higher, it's very clear that that's a stock that's going to outperform and will continue to do well. So I think for anybody who has access to charts, ratio charts is probably the only way where you can pick big winners. On the fundamental side, you don't want to get into the mess in terms of what's happening with foreign policy, because that's something that's impacting India, impacting a lot of Indian companies, and nobody knows, how the Trump policies are going to be over the next 6 to 12 months, even though we believe that it can only get better from here, because I think most of the negatives are in the price and it actually cannot get any worse. So I think look at valuations, go back to old school methods, look at valuations, try and be in stocks which have a reasonable valuation, reasonable return ratios, a reasonable market cap comparison to global peers, and I think it's fine. I mean, a lot of quick commerce companies, if you really compare it with global peers, are very, very expensive. Even though they might have potential to do well, I just feel that valuations are out of whack.
Okay. Where do you think still value is to be had in the markets at this point in time? And given the kind of environment that we are in, some of the outperformance could start picking up, maybe like you pointed out, next quarter onwards.
See, I still feel banks and NBFCs are a big opportunity. I mean, Bank Nifty at 56,000, the way PSU banks are placed at this point, the way private banks are placed, given the kind of trajectory of earnings that we see over the next few quarters, I do believe that the Bank Nifty this year will do a 60,000 at least. I know it's not big in percentage terms, but it's an important psychological number, and I think it will get there. NBFCs will continue their run up. Housing finance companies will also do very, very well. So I think this is a space that we like. And, it's not done as well as many other sectors. As you might have noticed, the old favorite defense, railway, infra are not doing well now. So I think their trend is done. Now newer sectors, newer themes will make a comeback. And for me, metals, PSU banks, banking overall, and auto are three spaces that we really like.
Fantastic. Thank you so much, Gautam, for being with us on this special. I wish you, all the best for the festive season. May this year turn out to be an even better one for you, for your investors at large, and of course for your family members. Always a pleasure to host you. We'll have you back very soon to talk about more of such trends.
Thank you, Sakshi. Thank you so much.
All right, viewers, we wrap up this festive special. And remember, in the series of Diwali special interactions, we are going to be getting you such top market experts from diverse brokerage fields, as well as their own independent research as they have been doing, to help you out, identify, chalk out for yourself a strategy that you may want to also apply for your own investment portfolios to definitely build one which can create alpha despite all the uncertainties that the markets are grappled with. So stay tuned with us. Markets Today will continue to get you such coverage. And of course, on daily calls at 12 noon, you can ask all your questions.
Even before a year has passed since Ratan Tata's passing, India's most iconic business house finds itself in turmoil.